Welcome back. Welcome back. Welcome back. Hey, you're like, welcome back. Welcome back. Welcome back. Okay, what's going on, guys? Thanks for clicking on the video tonight. All right, I'm just having a good time. Hope you guys enjoyed yourself over the weekend. We are back for another episode of Monday Madness. Monday Madness, episode 11. And you guys are in for a good one. I tell you what, CPI is ready. CPI is ready to be released tomorrow. And so you guys want to be prepared, all right? We got some data releases. We're going to do some recaps like we like to do, because we're going to see exactly, peel back the layers and see what I went over this weekend for the mini course that I dropped, all right? And if you want to check out that video, click that link right here to the above and the right there, all right? You're going to see in that video how I turn discipline into income. All right. So if you missed it, make sure you check it out. But today is going to be a recap. We're going to go over the SPY. All right. And we're going to talk about the broader market with some stock talk and live commentary. Again, I am Coach UV. All right. Unique Trading Group is the company I started. And here is where strategy meets mindset and discipline turns into income. All right. So stick around. All right. Because this week, this breakout pullback could be the biggest trade of the week. All right. So you don't want to miss it. I'll be right back after this commercial break. What is this grand mosaic of an auction theory? In this quick mini course, what you're going to see is this is what auction theory is, okay? Take a range from the high and the low. All right, here's a high on the intraday time frame on a 5 minute, and you want to grab that low. All right, in between, all right, in between here in this range, this box, all right, your midway point is your 50%. Okay, we're going to put a yellow to represent 50% mark. Okay, remember this is an auction. All right, and you want to think in threes. My system teaches a 3-step system, systematic approach. All right, you can maneuver a little bit if you want to be flexible, but it's simple in nature. All right, so the midway point of the range is the yellow line. The bottom where price bounce is your green line for a buy signal or calls if you're understanding of that actual term. All right. And last but not least is your 100% mark. So just to recap, we have 150 and to recap, we have 0%, 50%, and we have 100%. All right. These are your 3 levels. All right. These 3 levels here is your 0% mark. Okay. We have our 0% mark. The midway point, we have our 50% mark. What does this represent? Now that we have our levels, okay, we see what these levels are, all right? Simple 3-step system that I teach my traders and my mentees. My students love this because it's simple in nature. As you watch this video, when you play it back to understand what I taught you in the beginning, this will make more sense, all right? Now that price I gave you was the previous close from Friday, 622.74, all right? In line. All right, and so what you want to see is, all right, you want to wait to see if price is going to hold here or break below. If it break below, we want to think about a small risk to reward. A small risk to reward is a 1-to-1. All right, this is not a big area. Why? Because demand is here. Demand is here. There was already a trap right here waiting. Price bounced there. And so you don't want to be thinking sell, you want to be thinking take profit if we fall below 622.74. If we hold there, we create a... All right, now, so listen, I'm going to end that recap video there, all right? And we're going to head over to the actual chart, all right? Now, that video that you just seen, okay, that was a video of the weekend I put out about exposing a weak spot for retail, all right? The number one signal that you're going to notice in that video
is going to be available for you. All right. And so we're going to go back and piggyback off of that video because it makes sense to know where we're going, but we need to know where we came from. Right in front of you is a precision momentum sort of setup. All right. We're going to come back to this. This is going to be getting you prepared for the SPY. All right. But I want to go back and double back because the video that I showed you was a recap. And so let's see how that actually played out today on the chart right in front of us. All right, and we're going to use the 5-minute time frame, a smaller time frame, so that we can see the move even better. Okay, so what happened today? All right, what happened today? A lot of fear going on. All right, a lot of fear in the market, and so this brings opportunity. All right, fear brings opportunity. And I mentioned last night that we could see a trap. All right. I gave you a very intuitive message over the weekend about what to expect. If you haven't seen that video, again, check that video out because it's very informative. All right. I appreciate you watching this video. If you stayed this long, give me a like. All right. If it's valuable, and don't forget to hit the subscribe button and the bell notification. That way you're notified when I drop valuable videos just like this. All right. I really appreciate you guys' time. It means something. So why not get some value out of it? All right. All right. So I informed the group in the community last night. All right. Right here is what the video was focused on. All right. Replaying back where it's at so we can see what happened. All right. I mentioned right here, that's that price that if we fail, right? If we fail right here, that we could fall and that retail traders would try to buy puts. Puts mean a drop in the market. PUT, a put option. You can make money when the market falls down. And so some traders like to chase because they don't have a plan. They don't understand context. And so they chase. And what do we have today? All right. Price bounce exactly where I said, around 620, 621. You see the accuracy? That's the accuracy you get when you join the unique trading group and follow my guidance. Not because I'm this grand guru, but it's because I've been doing it for a while. I'm very passionate and I've been proving things week to week, month to month. All right. All year just about. All right. And so there's a home for you here if you really want to turn discipline into income and make trading simple and really make a consistent thing out of trading. All right. Okay. So here we go again to recap. We got that fake out. We trapped in those people, those Ricky people right here trying to sell the market down. All right. Remember that put option I mentioned. And now here today, when the market opened, what do you have? All right. The market dropped and did a big scare. I want to say around 11 or 12 o'clock. The market dropped right here and a whole bunch of people were panicking. I know why, and I know for sure because I seen the comments in certain forums, in certain communities that I'm involved with, and so I seen the panic. All right, this was the signal that I was waiting for, and not only that, but price fell. Right, this candle here. All right, as we went up, this candle here fell right back to these zones right here. All right, I hope you guys can see that. I'm gonna make it bigger so that you can see it. All right, this is psychology. All right, this is psychology. This is what you should be thinking about. This is where the juice is, the money. All right, the A+ setups and understanding how to read a chart without indicators. If you notice, anybody watching, whether you're beginner, intermediate, and or advanced, there are no indicators like moving averages. All right, only RSI type indicators and a daily open and close line, so that I don't have to look at it, but it's there. All right, this is purely price action. All right, price action is what you guys are watching, mixed with market structure and psychology. This whole chart represents human behavior, buying and selling, and you want to be on the right side. And so just to recap, these prices here were already anticipated. And what do we have here? We have that higher low. Look at this higher low we have right here, okay? If you've been watching my videos, of course, you know already that these are buy signals, okay? And so once I seen that big drop, then we go back to the drop again, I knew that was the signal for me to buy. And that's exactly what I did. And for the rest of the day, we trended up. Fear. Fear creates opportunity. Red candles equal fear. Prices dropping and people are taking their profits from when they took a up trade. Follow my cursor. Follow my cursor. Right here, people took a trade to the upside. They're making money. They're taking their profits. All right. And the market drops. A reset. A video game. And look how much money you could have made just buying the setup that I gave you, that I taught you. All right. From 621 all the way up to 624. A nice 3-4 to 1 risk to reward ratio. And right now, the market currently is going up. All right. And so we're going to take another small break for some live commentary. All right. I want you guys to see the sentiment that goes around the world and why I say this was a rare signal that you guys should be paying attention to. All right. This is where the money is in these environments. All right. So stick around as I show you some of this live commentary, and I'll be right back with you guys in a moment.
We're talking about earnings season. We're kind of really shifting the conversation from tariffs. The markets don't seem to be reacting that much to the tariffs. Evercore ISI out with a note saying that tariff developments increase odds of a sell-off. Obviously, we're not seeing that right now. Markets turn positive. But they go on to say likely result in further EPS estimate reductions, even as investors are sanguine about the potential EPS estimate cuts. The inverse correlation of the trade uncertain and the S&P 500 increases the odds of a near-term pause in the stock's rally. Do you see a setup like this one, or do you think the tariff threat and fear may be overblown and people are really looking ahead? They're looking ahead to earnings.
I think, with the exception of the first announcement of tariffs on Liberation or Independence Day, whatever it was, Liberation Day, the markets ignored it. The market's ignoring every risk. They're ignoring the risk with the Fed. I mean, you've got somebody in the White House who's a real estate investor. They live on debt. So you've got that. You've got, normally you'd see a major upheaval in the bond market. Because rates would just go through the roof with instability there. If you listen to Kevin Haslett today, and I think he's a smart guy, he's got zero credibility for what he says, that tariffs aren't going to impact the buyer, meaning the consumer, or companies. I can tell you in the supply chain, as we look at it in some of our companies, aluminum's up 50%. So sourced from the U.S. The U.S., the companies here are not fools. They now see a pricing umbrella 50% above where they were. So where are they? They raised their prices 35%. So even if you don't pay the tariffs, you're going to pay it here. And look, companies that have EBITDA margins, like grocery stores, like many others, the auto companies, they're mid-single digits at best. They can't absorb the tariffs to operate a loss. So we'll come through. So the question is, back to Trump, he said there are deals. There are no deals. There are letters that he's saying this will be our deal. The deal takes two parties. So he's going to have to renew.
And I want to stop it just there before we continue. I want you guys to realize what he just said, okay? What he just said, all right? These are letters. It's not put into law yet, all right? This goes back to the video that I dropped over the weekend about exposing a weak spot that retail missed, all right? It's because it's sentiment, all right? It's engineered fear. Intuitive nature versus engineered fear. The news dropped over the weekend for a reason. This is a game and you got to learn how to play it. It's about the process, not the profits. Be smarter, all right? Trade like the banks, but you're rocking with Coach UV in the Unique Trading Group. Here's a home for you to really get this. If you ever wanted to, I'm for you. If you ever wondered, man, this is for me, I am for you. So let's continue this video before we get into the charts to close down this episode 11 of Monday Madness. Let's get it.
Negotiate. The question that you bring up, at some point, he's not going to tackle it. At some point, he's got to say, we're doing this, not just with steel and aluminum, but more broadly. So every other country feels it. The critical countries are, of course, India and the EU and Japan. Once you get through those, then the others really don't matter. So I think you've got to see some deals or some maybe fake deals like we did with the UK, where it really doesn't matter. In terms of the market, overall risk in the market, it's definitely the Fed, right? You can't put a complete dove in there. It's definitely tariffs. It's also inflation that could come from the spending bill that was just passed. And then it's more cuts what they're talking about. So I think that the market's going to continue to ignore these risks as they have for the last year. And the market steps okay. And just the final word in earnings, it would be an extremely disappointing earnings season, if more than 75% of the companies don't exceed expectations, because that's what they always do broadly, both on the revenue line and on the earnings line.
But is that what you think is going to happen? You're saying you expect that to happen?
Yeah, I do. Okay. I do.
So I feel like the three of you are pretty optimistic about this earnings season.
I didn't say that. Well, I mean, I don't think that
which have been lowered in all fairness.
I think you have to have a strong awareness
of
what's going to happen this earnings season, the potential for margin compression to occur, is real. And I think if you're looking for some form of a near-term catalyst that's going to shake the bullish momentum, I think it's coming from earnings. It's not coming from the announcement of these particular tariff rates.
All right, and we're going to end that portion of the commentary there, okay? Now listen, this is what you guys got to understand, all right? This is a very, very big moment to anticipate, all right? CPI is coming next week, all right? I'm sorry, CPI is coming tomorrow. And so you want to be prepared on how this can set up price, all right? This data affects price action. If this is your first time watching or your first time hearing this, all right, this is forexfactory.com, and I use this as a data point to see when economic data is released. It's about interest rates, the prices of goods and services, all right? These are telling us the GDP, gross domestic product, all right? What are the prices doing around the world, all right? Are companies making money? Are people working? All right, jobless claims, unemployment data. These are the data points that's released on this website. And the one that matters tomorrow, right? Tomorrow is going to be the CPI. And so we have been bullish. We have been bullish on the market. Okay, we've been bullish on the market, all right? And so like the guy said, earnings could shake it up. I don't think it's going to be anything else because we see the technicals. We understand what's going on. We see the trap, all right? And so there could be some earnings surprises in the near-term fashion, And so what we want to do is we want to be properly prepared. We want to be properly prepared. If you're already in swings, if you're already in some sort of type of trades right now, then tomorrow, depending on what side you're on, then it could probably rock your world. But tomorrow will be very interesting. All right. So now let's get to the lesson at hand. All right. Because we're going to end this video and we're going to wrap it up. We're going to give you some guidance for the SPY tomorrow. SPY is the Standard & Poor's. All right. 500 companies are inside of this ETF. ETF stands for Exchange Traded Funds, all right? And so it represents 500 companies. And so this gives you good risk to reward on your money if you want to learn to be a day trader and or a scalper, swing trader. You get good swings on your money, all right? It's about making money and getting good risk to reward, all right? And that's what it's about, all right? The process over profits. And right in front of you, all right, what I have for you. If you're part of my Discord, all right, I want to say thank you for being a part of my Discord, and shout out to Joy. She just joined the Discord group, the Unique Trading Group. All right, here we are going to teach you how to perfect a personalized trading approach based on your personality. All right, and we have proof of concept. We have proof of profits from different students. All right, this is what you get when you join. So if you want to join a community, all right, like that, all right, like-minded individuals where we teach you how to fish so that you're able to eat for a lifetime. All right, bring your expertise and whatever you know on over here to the Unique Trading Group right down below in the description. All right, make sure you click that link. All right, come on over to the family. We would love to have you. Now back to the lesson at hand, because I know what you came in for. All right, and this could be the biggest breakout pullback that we've seen and the biggest payday for you all week. Now pay attention. 625.16 is the first trigger for calls. All right, this is the call out. All right, if you want to take a trade, this is the call out. All right, 625.16 on the 4-hour time frame and or the daily. All right, I'm sorry, and we're going to use the daily time frame is the best to witness what I'm trying to tell you. All right, 625.16 is the first trigger for calls. And so if price gets there, you want to see it react, and throughout the duration of the day you want to see 625.16 hold in order for you scared traders or newbies that want to take this trade but are afraid to hold. Because if I get this trade, I'm going to hold it until 626.87, which is the first target. Now mind you, we are below these numbers, so you got a chance to get in there. Right now we are below the previous close of today. All right, the 14th of July. 624.81 is the closing price of today. All right, it is 5:50 at the time of this recording. This is a preparation and a recap video to make you guys informed about next week and tomorrow. All right, a recap and an informative video about tomorrow so you guys can be prepared. All right, and so one of my edges is, what am I going to do if the price is below the previous close? Well, if price is below the previous close, I'm thinking bearish. If it's above the previous close, I'm thinking bullish. What does that mean for the first time watchers and listeners? Bearish means price is going to go down. All right, and bullish means price is going to go up. Okay, That's what that means, all right? And so that's my edge in the market. It's something that I use as a tool so I don't have to guess what direction I want to trade in. And so now that we are below that price, all right, there could be a discount and or resistance for us to fall back to lower prices. But we didn't get that today. As I showed you on a smaller time frame, we trapped in liquidity and we continue higher. And now we're still creating these higher highs on the daily time frame. And so I want to see 625, 16 hold as demand, as a true spot of demand for price to agree there, all right? And I want to take a call here, and my first target is 626.87. Now let's say you bought 5 or 10 contracts. If we get to 625.16, you take that call, you take that trade. As soon as we get to 626.87, and for example, if you bought 10 contracts, let go of 5 of them, endorse 7 or 8. All right, it's your prerogative to do that, right? Take some of your money and let the rest run to the higher targets. All right, the higher targets could be 630, and this is my first target for a CPI blowoff top, a breakout pullback. Now let's go to the 1 hour and maybe a little smaller so you can see exactly what I mean by this. Okay, exactly what I mean by this. This is what I want to see. All right, pay attention and take notes because this is the last part of the video. I see 2 things. All right, remember I told you those 1 or 2 scenarios. All right, one of my favorite is the W shape. All right, some call it a double bottom. All right, I call it a W shape, but you do see a double bottom. Price stall twice, once and twice. Okay, my best entry for calls to towards the upside will be your pivot points, where the V-shaped cone, like a reverse cone right here, pivot points are where price bounce. These are my best trades. All right, well, right here you see that W, don't you? You see that W? All right, we rejected here, created a lower high, came back to retested these lows here. All right, and now we are retesting right here. Okay, so that neckline needs to be broke. So that's the shape, the 1 shape inside of the 2 shapes. So now we need to see a breakout pullback. So let me make that make sense for you. All right, and this is where we're going to roll out towards the end of the video. Okay, all right, this is what you want to see. All right, that W resembles this W. Okay, now what happened right now and today, the breakout point in the breakout point was right here at the point of control, 624.27. All right, 624.27 was a nice little sweep off of this same area here to break these highs. All right, so we broke out. Why'd I say it's a breakout pullback? See this area? I'm sorry guys, bear with me. Let me make sure that you guys can see and that the screen is clear. Okay, I want to make sure that the screen is clear. All right, you see this candle here, this area right here? It's a wick top, the top of that candle. All right, the top of that candle right here is the highest in price in that moment. This price came up and it broke that price, and you can see that by a simple horizontal elementary line. We want to see the price break for a breakout pullback. All right, so even though it's not much, all right, it did that. Okay, all right, another breakout was here in this zone. All right, so we're breaking out of these zones for a pullback, breakout pullback. And that's what I want to bring to your attention here, a breakout pullback. Like I said, could be one of the biggest trades of the week. Here you go, right here, the biggest trade of the week. All right, so we break out from our areas. All right, we break out from our areas, break out and pull back. So this will be the perfect pullback for you to catch a 20 or 30% pullback. All right, but we could fall to yesterday's open. Okay, we could fall to yesterday open. But even if we do, guess what we do though? We still create a higher low. All right, and as long as we are bullish on the higher time frames, right, like I mentioned, the daily, as long as we're bullish and making higher highs, okay, then we are to buy the dips. Okay, we are to buy the dips. That's what we're supposed to do in a market like this. All right, it's never going to change. If it turned bearish, then we're going to be thinking about selling the pop. Okay, you understand what I'm trying to say to you? We're going to be thinking about selling the pop. All right, so with that said, we're going to get back to the charts and finish up here. All right, appreciate you guys rocking with me and your patience. All right, this is an episode 11 of Monday Madness. Monday Madness, CPI game plan. This is the game plan for you tomorrow if you want to make some money. Okay, this is the game plan. Wait for the pullback or the reaction and a break of the neckline. All right, breakout pullback. We could revisit these prices here, so watch for the same demand level to be shot. If we break below here, we could see a early flush because we do have earnings. Earnings are reports that come out from different companies like you shop at, like Walmart, Target, Amazon, and they have to report every 3 months on how much money that they made over the last 3 months. And right now we're in that cycle with July. So we have 2 more months inside of the cycle, August and September. And that's what's going to tell for next earnings. But right now we're reporting earnings what happened from the previous 3 months. So you guys get ready. Hope you enjoyed this video. I am Coach UV. This is the Unique Trading Group, where strategy meets mindset and discipline turns into income. All right. If you enjoyed this video, give me a like. All right. Give me a thumbs up so that the algorithm pushes it to other folks who like videos just like this one. All right. Thank you for your time. It's been a good one, guys. Hope you enjoyed this episode of Monday Madness 11. All right. And until the next time, peace.